Folks, are we on the cusp of an emergency Fed rate cut? Again, folks, as somebody who's been saying no cut all year, I have to acknowledge that an emergency Fed rate cut might be on the horizon. Why am I saying that? One, inflation is proving to be weaker than expected. The threat of tariff impact has yet to materialize. However, more importantly, the job market appears to be falling apart. Last month's job number, sure, it said 137,000, but did you see 600,000 full-time jobs? Boom, gone, vanished. Did you see 199,000 birth death adjustment, which is just math, not real jobs? Also, most importantly, the weekly jobless claims, which I have been telling you to watch every Thursday, have broken trend in a meaningful way. They are up 4 weeks in a row on the cusp of 250,000. And worse yet, my biggest warning about jobs in 2025 was continuing claims. I think we are about to have a duration-based unemployment versus a huge shoot up in unemployment. We are now at 1.95 cycle high and likely to be over 2 million in the next couple of weeks. All of this might lead to an emergency Fed rate cut. Matt, you're in the mortgage industry. You've seen a lot of movement in the 10-year in rates in the last 48 hours. I don't know about you, but an emergency rate cut might be coming out of nowhere soon.
Yeah. It's I wouldn't say it's probable, but it's more likely than ever. And even if there's no emergency rate cut, the next few Fed meetings will definitely be interesting. If there's ever been a case for, okay, Jerome, we're starting to see some data that will allow you, the justification to start cutting rates, specifically jobs and that job market and inflation, because we all expected, myself included, I remember on Monday, I recorded a market update where I said, man, if we've got some numbers that come out looking at May 24 versus May 25 that have a little bit of some of this tariff stuff baked in, we could get a number that's not pretty in inflation. And I was afraid of this inflation number that came in below expectations. And then, to your point too, the 248,000 jobless claims. I was just listening to Barry Habib talk about that. The thing that makes this one more meaningful is if you look back over the last, call it 3 to 6 months, every time there's a big number, and we'll call a big number above 240,000,
sure,
immediately followed the 2 weeks after with a lower number. This one is like 245, 248, like 3 or 4 weeks in a row of elevated initial jobless claims. So there's cracks in the job market. Inflation seems to be under control and low. And so there's justification for, all right, Jerome, we can start cutting interest rates to make sure that the wheels don't fall off of this economy.
Yeah, not to mention we got President Trump calling him Mr. Too Late. I think he's called a numbskull this morning. He also talks about, Bank of England with 10 or 11 cuts in a row. Now we have Paul Tudor Jones talking about we need a dovish Fed chair, not Jerome Powell, because we got to run the economy hot. And it's just again, I haven't changed my opinion, right? I don't change my opinion with the wind, but I have to acknowledge, if this job market continues to break the way it's going, you could get an emergency cut. Let's talk about that. So what is that? So first off, we're not getting a June cut. The Fed meets next Wednesday. Not happening. No cut. Nothing. But we've got a couple of more reports before July. And if the weekly unemployment claims go from 248 today to, say, 292, continue this uptrend, you are going to get the Fed's attention, especially if inflation continues to disappoint, continue to have demand destruction. It is not unreasonable to think a July and certainly a September rate cut, if not an August rate cut, which would truly be an emergency, right? There's a gap between July and September's meeting. You really could get an August surprise emergency cut.
Yeah, I think so. And even if you don't, I think the thing that I think about, is as this relates to the real estate market specific, and rates has been what everybody has been waiting for, really. Like, some people say it out loud, others don't say it, but I've got so many buyers that are like, and they're on this fence of, affordability, monthly payment, where they're like, I can't do it, right? And so they're just sitting still. And I don't know if 6.5 is their number, 6.25. Because I'll ask this question, Mike. I'll ask people too, and it's like, I don't know. I think we're going to hold off for now. Rates are a little bit high, and I'm not trying to be a smart ass, but I'm telling them, like, what's the number? What's the rate where you buy? They don't know. They just know that it feels a little bit uncomfortable, the rate and the payment associated with that rate for them to buy. So it's shaping up to be a really interesting second half of 2025. I think a lot of people come out of hiding what was a pretty lackluster spring buying season might turn into summer, fall, winter, higher than average, higher than expected amount of demand. And now there's actually some inventory to buy. It could, without doubt, I think the second half of 2025 could see an increase in the number of sales.
Yeah, it's really funny. I've actually been on record the last month or so saying, the spring selling season was it does, but watch the fall, right? Assuming you're a part of the country that's not a frozen tundra in the fall. I think the fall is going to be surprisingly good. Why do I say that? Not because of rates, not because of emergency rate cuts, not because of this, that, the other. It's just the uncertainty. We have been living under a blanket of uncertainty. And I have studied consumers for 30 years. And typically speaking, consumers can conserve for 6 months. At the end of 6 months, they get tired of conserving. They're like, I got to live my life. I got to do my thing. Nothing bad happened. We're okay. And if I'm right, and again, I go back to, what was it, April 2nd was Liberation Day, where the uncertainty just skyrocketed. If you take that day and you add 5 or 6 months, you're into September, October. I think it's very likely that, housing has a shockingly non-trend based months, which means above trend. So yeah, I think this is all teeing up for a more active fall than most people expect.
Yeah, and so with all of that in mind, if you're a buyer, and like we've talked about before, I'm team buyer. You want to buy when everybody else is afraid and on the sidelines and not doing anything, which quite honestly is kind of right now. 3 months from now, 6 months from now, you've got 2x, 3x the demand, and all of a sudden you're competing. That's not necessarily the market you want to operate in. And so if you're an investor or if you're buying an owner occupied, I'm having a lot of interesting conversations where buyers, I had a buyer last night reach out and be like, hey, how much credit do you think we could get on this house? What do you think it would look like? Or help me kind of strategize what we could do with 10 or 15,000 in seller credit, because I want to ask for it. Well, this house is sub 600,000 in a neighborhood that's, that's kind of the bottom, and it's only been on the market for 9 days. And that's the thing too, is like, you can't have the best of both worlds. You can't have low rates and great conditions for buyers, and also what you want as a buyer is a relatively distressed seller, right? And a seller's going to have plenty of people interested in this house where they're not going to have to fire sale, offer a ton of concessions. And so, if you're in a position to buy while it's still hard and scary for others, you're going to get the best deal, knowing that if it's 699, 7.125, 7.5, whatever the number is, depending on the type of loan you're getting, if you get in at a price you're really excited about, know that that's the thing that won't change 5 and 10 years from now. The interest rate will. You will more than likely have an opportunity to refinance. And so, all the cliche crap about date the rate stuff, like, don't worry about that, but get yourself a good deal when conditions are that you don't have a lot of competition, and then worry about optimizing the loan and the interest rate and some of that stuff later.
There you go. I love this conversation. Again, if you want to get active, you want to understand how to do it, how should they reach out?
Go to greatmortgagebroker.com. I've got 48 states covered, so we will triage that, and myself, Michelle on my team, Lisa on my team, they will make sure, hey, I'm going to connect you with Troy. He can help you out in Tennessee. You know, if you're in California or Texas or Florida, I'm operating in those 3 states. I'm having a lot of fun because as team buyer, you're seeing parts of Florida and Texas. I think I told the story of the, shout out to ORAT listener who we got a great deal on a place in Florida. We got money to buy the rate down. We got money to pay for the closing costs. We got a price that was less than I'm sure the seller set out to get when they listed this property for sale. But that's the state of the market in a lot of the Florida markets. And so, you just want to be prepared. I had a conversation yesterday, and this is unrelated, but it's applicable here. This guy runs 1031 exchange, and it blows his mind, as it blows my mind, how ill-prepared people are and how they literally just don't pick up the phone and say, hey, Jay, I'm thinking about a 1031. What do I need to do to prepare? What kind of things do I need to know? What can I do now? The same thing happens in mortgage, where I'm like, as you write the offer, or when you find the house that fits your criteria, is not the time to go educate yourself and learn about, what the mortgage is going to look like and how much you're putting down and all this other stuff. Do that first, which I applaud the people that truly do. Yesterday, the client that reached out said, here's the price I'm thinking with a little bit of credit. I'd like to see the following. If we can get some credit, what would you? And then I get to do what I love to do, Mike. If I was you in this situation, knowing what I know, house on the market for 9 days, relatively competitive market still, ask, it doesn't hurt for 10,000 in credit. Use that 10,000 to lower the interest rate by 1% in both of the first 2 years. So then you're going to have 599 for year 1, 599 year 2, and then, September of 2027, when this thing goes to 699, by that date, you are hopefully going to be in position 5.5, 575 to refinance. But we can't go through those scenarios, and we can't game plan if you never pick up the phone. If you don't go to greatmortgagebroker.com and fill out a form, and you're going to wait until the house shows up, wrong way to do it.
Wrong way to do it.
Yeah. And that's where I start, and I love it. I've got plenty of buyers, and people probably relate to this. You don't know exactly the price point, not sure whether it's 5 or 10% down, not sure, maybe it's 2 different markets, but start, get some baseline information. And then I send out info and I go, hey, here's just some really basic info on 375 with 5% down and 10% down. Take this, discuss it with your spouse, start to think about because what happens when you start is then you allow the professionals, us on our side, to show you. And then you go, oh, you know what? We definitely want to do 10% down. I don't want my payment above that number. Okay. Now we've decided that. You know what? I think 375 is definitely the price. We're looking at this neighborhood where stuff is mid 400s. I don't want a mortgage payment that high. Let's stick to 375. Then you actually go out there and you've got a plan. You've got a plan and you've got some ideas, versus the 80 to 90% of people that are like, I found this house I love. It's 480,000. I've got 62,000 in the bank. I don't know. What should I do? And by the way, offers are due by 6 p.m. Like, that's so common, Mike. And I just don't want ORAT listeners to be in that bucket, because it causes more stress. It's not as fun.
There you go. Greatmortgagebroker.com. Get the process started. Have some conversations. Know what your options are. Thanks, buddy.
Yep. Thanks, Mike.